Okay, hi traders, here's a new video. First of all, the risk warning, your invested capital may be at risk. Don't trade with money you cannot afford to lose. And this video is not investment advice. So this video is another trade school high frequency trading explanation and example video. You see we have weekend and I have no OTC market, so I cannot show you some live trading. So we're going to discuss those trades which I have done already. All my trades and all those things which I'm explaining in this video are based on those things which I have explained in my ebook. Get this ebook, it's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame and any kind of financial instrument. So get this ebook, it's for free. You'll find the link in the description, and in the description you will find also the link to the Facebook group. Join it. So okay, that is it already. So let's start, because I'm a little bit in hurry here, because I am expecting some visits. So I would say let's start. And here is this video which I have chosen here, and I will try to cover all of my trades and all of my videos where I have done so many trades in a few times where I didn't have the time to explain everything. So what do we have here? First of all, like always, first of all, the identification of the market condition, yes, and that is looking here like a ranging market. Yes, you see here the flat, it's flat, everything is flat. Also the crossing here, it was a fake breakout. That is a clear sign. You see here it's yes, it's ranging here. Yes, it's ranging market. Maybe here was some kind of double top, and now we are getting here after this double bottom. Sorry, after this double bottom, we are getting here now into a pullback maybe. Yes, and that's the reason. Yes, that was what I would understand here. Here we have the neckline, or the neckline is almost this kind of 20 EMA, and that's the reason why this double bottom here looks not so good. Yes, but if you turn it around, you see that the second top is higher than the first top, and then it's again a good double top here, double bottom. And you see also the breakout of this neckline, which is in this case the 20 EMA, yes, is showing here a nice uptrend, yes, and that's it already. That is the market condition, and you should almost always understand the market condition before you're gonna do any kind of trades. So, okay, let's see what I have done here. So, and to see the time was put, and I would do a put here. And why I have done a put here, so let me stop this video so I can explain this. So we have here this kind of area here. Look at this. We have here this kind of area, yes, and this these two areas here, this resistance area is and this rejection from this area is the initial start of an upcoming downtrend. Yes, that is what you should expect, at least to this level here. Yes, this is the pullback, the last kiss of this level of this double bottom. Yes, but you can also expect some kind of retracement here. Yes, of this upcoming downtrend, and here at this level, because price already has rejected through this. Yes, it has done here retracement, yes, retracement, and that is, and because we have here flat market, yes, ranging market, all EMAs are flat, and price is trying almost to range around those kind of EMAs, but they are too close together, so there will maybe not be any kind of ranging. It will be a downtrend. Yes, if there would be much larger wider, yes, you could expect that price would range around the 200 EMA. But if the EMAs are close together, you cannot expect that it range around it. It will be more like a pullback. Yes, a fake breakout of the 200 EMA. So okay, that was to only to make it more clear to you. So, and I have entered here into a put because the previous candle was showing huge selling pressure with the rejection from the resistance area above, yes, and that price would probably going down further and break through the 200 EMA, because we have ranging market and the 200 EMA is flat. Yes, so okay, we are breaking through this, and this will be in the money. We saw a small rejection, yes, we saw a small rejection, and I entered again into a put, yes. And this put was again because we got here this kind of area which was showing already that we have here selling pressure, and at this level, yes, because this candle is closed below the 200 EMA and we have still ranging market, yes. I was expecting, and I have expected, that price will retrace below this 200 EMA at the end of the expiration time. That's what I'm showing you almost often when I'm showing you this support and resistance videos, yes, where I show you how I enter into a trade expecting that price will close below the support and resistance area, yes. And that is the same valid for this one here. This candle broke through this 200 EMA with determination, so I'm expecting that this candle will close below this, and it's closed not below this, it closed exactly on this level. And yes, and now because those two here has closed, what's happening here? Yes, okay, it stopped. So, and I'm changing here, I don't know what I have done here, I'm changing here a line chart. Yes, I don't know what this was. Yes, flat low volume market. Yes, this is low volume market. That is the reason why I changed this into the line chart, to show you that the movement of the candles are really erratic. Yes, and they are not moving completely. Yes. So let's see what I'm explaining there something. That is not a good market to trade. Yes, and you see also this old gray, and on the 5-second chart. So, and then what I have done then, yes, it's not moving completely, yes. So, and then I entered into a trade. In what kind of trade? I want to do a call here, but then, because the market was not moving, yes, it was moving down, I understood that we are getting down. Yes, that is what I have understood. That price will try to range around the 200 EMA, and that price will not go up further. Yes, because we have here still ranging market. And what is the case on ranging market? On ranging market price will move in a range, and this area here was in this case a strong resistance area, and that's the reason why I entered into a put, because I saw the market was not pushing up further. Yes, obviously, yes, a little bit risky trade. Yes, because at the end, if market is not moving at all, yes, it's a little bit risky. But anyway, I have done this in this put, and it looks like a double top, yes, but the second top is higher than the first top, so it's not really a double top. Yes, but also this kind of double top can unfold, because it looks like that we have here this kind of area here, this 100 EMA, which is the neckline, and if you get this 100 EMA horizontal, you would see that these two tops are at the same level, yes, and so it could be a valid double top. And to see, I'm preparing to do a put here because the previous candle was a dark cloud cover, yes, and I have explained this almost often in my live trading explanation videos about support and resistance, and also about those one where I talked about the double top and double bottom. If you get, let me explain this again. So yes, we got a new candle, and when I enter into a trade, I will show you this what I mean. So I'm explaining here, we got a dark cloud cover, and then I enter into a put. So that is what I have explained often. So we have here this double top, yes, where the neckline is the 100 EMA, which is not flat, which is not horizontal. If it would be horizontal, it would be here on the same high. But important, what I want to explain is this kind of dark cloud cover. This dark cloud cover is a sign that there will happen now a downtrend. Yes, it will not mean that we get immediately. You can trade this next candle here. You can trade this, but you have to try to get the almost highest point as entry point. Then you can get this also in the money, yes. But mostly it's so that if the second candle after the dark cloud cover, engulfing candle, pin bar, is a green candle, yes, and is with upper and lower shadow, then you can expect that then after this green candle, after this engulfing candle and dark cloud cover piercing pattern or whatever, yes, you can expect that the next candle, yes, will be a trend continuation. And that is the reason why I entered here immediately into a put, because I understood after this green candle, and this candle was not this what I expected. I was expecting that this would be a red candle and break through the 200 EMA, but it got a rejection from this 200 EMA, and that's and because this was a green one, I understood that after this we get after this retracement, we get a continuation, and that's the reason why I entered immediately into a put, and that can be done almost every time. Yes, I will show you this maybe also in other videos. Yes, but this is nothing new. It happens often. If the next candle after a dark cloud cover, also about after an evening star, for example, you get after an evening star, you get a bullish candle, yes, but a weak bullish candle, you can expect mostly a trend continuation. Yes, and that's the reason why I entered here into a trend continuation, because those kind of candlestick patterns are not telling that the next candle will be a bearish one. It is almost more a context thing, where this candle then tells you that we get now a trend, yes, and there will be now a downtrend or something like this when we are talking about the dark cloud cover, evening star, or the engulfing candle. That is what's about, yes, and that was already. I think this thing would be clear. If you like this video, do a like. If you didn't subscribe, subscribe to my channel. And if you have something to say, drop me a line in the comment section. So I would say stay safe and bye-bye.